All right, let's get straight into it. I want you to think back. Think back to your last few trades. The ones that stung. Not the small wins, but the losses that made you lean back in your chair and just stare at the screen. You bought the breakout. It ticked up for a second, and then it reversed sharply, stopping you out, only to then rocket in the direction you originally thought. You saw a beautiful setup, a perfect retest of support. You went in, and the market just drilled straight through it like it wasn't even there. And in that moment, what did you feel? Be honest. You felt something personal. A quiet, furious thought in the back of your mind. It's watching me. The market saw my order. It's hunting my stop. It feels like you're playing a game against a cunning, sentient opponent who knows your every move. Here's the truth I want you to hear today. You're right. But you're right for the completely wrong reason. The market is sentient. It does have a consciousness, but its mind isn't some single, shadowy entity in a server farm. Its consciousness is ours. It is the aggregated, screaming, euphoric, panicking, hopeful consciousness of every single person with skin in the game. Every hedge fund manager, every pension fund algo, every retail trader in their bedroom. Every fear, every greed, every story they believe, every narrative they've heard. It all gets dumped into this psychic cauldron, and what comes out is a tick on a chart. So if you're fighting the market, you're not fighting a villain. You're fighting a ghost made of human emotion. And today, we're going to learn to see that ghost for what it truly is. We're going to stop fighting, and we're going to start listening. Because the market is two things most people never realize. It is a mirror, and it is a storyteller. And understanding this is the single biggest leap you can make in your trading career. Let's start with the mirror. Forget indicators for a second. Forget moving averages, RSI, MACD. I want you to look at a bear price chart. Just candles and volume. What you are looking at is not a mathematical puzzle. It is a psychological fossil record. Every hammer candle, every long wick, every parabolic spike, every consolidation box, it's all a frozen moment of mass emotion. That chart is a mirror, and what it's reflecting is the dominant psychological state of the crowd at that very moment in time. Think of it like a wave in a stadium. You've seen it. One person stands up, then the next, and for a moment, it's just a few people. Then a whole section is up, then it cascades around the entire stadium in this beautiful, rolling wave of motion. Now, who started it? Who's controlling it? No one. And everyone. It's a purely emergent phenomenon. It emerges from the collective decision of thousands of individuals to participate in the pattern. A market trend is exactly that stadium wave. It's a psychological phenomenon made physical in price. Your job as a trader is not to be the genius who starts the wave. That's a fool's errand. Your job is to recognize, early, when enough people have stood up that a wave is likely to form, and to have the sense to get out of your seat before the wave collapses and everyone sits back down. So, what exactly is this mirror reflecting? Let's get specific. Look at a sharp, high-volume sell-off. What do you see? You see panic. You see fear so urgent that people are hitting the sell button at any price. They're not thinking about value. They're thinking about survival. The mirror is showing you pure, unadulterated fear. Now look at a parabolic pump, where the chart goes almost vertical. What's that? That's greed. But not just greed. It's blind, euphoric, this time is different greed. It's the phase where logical targets are abandoned because the story is so intoxicating. The mirror is showing you mania. What about a beautiful, textbook breakout that immediately fails and slams back down? That's the mirror showing you herd mentality. See, if a breakout is too obvious, everyone sees it. Everyone piles in. And where does everyone place their stop losses? Just below the breakout level. It becomes a self-fulfilling prophecy. The market, reflecting the crowd's uniform positioning, sweeps down, collects all those stops, and then often reverses. It wasn't a trick. It was just the crowd being a crowd. Even support and resistance, these aren't magical lines. They are levels of shared memory. They are prices where a huge amount of pain or joy was felt in the past. The mirror holds that memory. Traders remember getting burned selling at that low, so when price returns there, they buy. They remember the joy of taking profits at that high, so when price returns, they sell. The chart remembers. Your first practical takeaway is this. Before you even think about a trading setup, I want you to do one thing. Look at the chart and ask this question out loud. What emotion is frozen here right now? Is it boredom? Indecision? Panic? Euphoria? Just label it. You are no longer looking at a chart. You are looking into a mirror, and you are diagnosing the crowd's emotional state. This alone will stop you from buying into euphoria and selling into panic. Now, if the mirror shows us the emotion, what creates it? What makes the crowd stand up and start the wave? This is where we meet the storyteller. People don't buy and sell based on raw data. They buy and sell based on the stories they tell themselves about that data. Data is cold. A story is compelling. A story has heroes, villains, a future, a threat, a promise. Logic argues, but a story convinces. And nothing moves money like a compelling story. This company is the future of AI. This token will bank the unbanked. The Fed is going to pivot. This is the next Amazon. These are stories. They are simplifications of a complex world into a narrative we can believe in and, more importantly, bet on. Stories create FOMO, the fear of missing out, which is just greed wearing a social mask. They create social proof. If everyone believes this story, they must be right. And here's the critical part. A story doesn't need to be true to make money. It just needs to be believed and have a runway. Your job is to ride the belief, not the truth. Every major market move is driven by a story cycle. It has 4 acts, like a Shakespearean play. Act 1, the heretical truth. This is the birth of the story. It's whispered in corners, on niche forums, in research papers. It sounds crazy. The internet will connect everyone and change commerce. In 1995, that was a heretical truth. The people who believe it here are the true visionaries, and also the bag holders if they're too early. The mirror here shows a quiet, choppy accumulation phase. Act 2, viral adoption. This is where the magic happens for traders. The media picks up the story. Financial channels can't stop talking about it. Your Twitter feed is flooded with it. The story starts to make sense to the early majority. The price action begins to confirm the story in a beautiful, self-reinforcing loop. The story pulls in buyers, which pushes price up, which makes the story seem more credible, which pulls in more buyers. The mirror here shows strong, steady, trending waves. This is the sweet spot. Act 3, the euphoric peak. This is the climax. The story is no longer a story. It is accepted as undeniable fact. Your Uber driver is giving you tips based on it. The narrative peaks. This asset can only go up. Traditional metrics don't apply. This is where the mirror shows you that parabola, that vertical climb. It is reflecting blind, story-drunk belief. And this is almost always the end of the move. The story is fully priced in. There is no one left to convince. Act 4, the twist. The final act. Reality intrudes. Earnings miss. A technical flaw is found. A central banker gives a hawkish speech. The beautiful, simple story cracks. And when the story cracks, the belief shatters. The mirror reflects this as the violent, panicky sell-off. The stadium wave collapses as everyone tries to sit down at once. Your second practical takeaway: you must narrative check every single trade. Ask yourself, am I buying this chart or am I buying the story? Is the story in the quiet, early viral adoption phase? Or is everyone and their grandmother already screaming about it in the euphoric peak? The most intoxicating stories are the most dangerous. Trade the chart in the mirror, but always know what story the crowd is listening to. Now, here's where we synthesize it. This is your edge. Your edge lives in the tension, the gap between the storyteller and the mirror. The storyteller is screaming, AI will change everything. Buy this stock. The narrative is powerful, intoxicating. But the mirror is showing you a weekly chart that has gone parabolic. It's showing you a volume spike that screams exhaustion. It's showing you a price pattern that is utterly detached from any reasonable moving average. The story says one thing. The mirror shows you the emotional consequence of that story. And when the emotion in the mirror reaches an extreme, euphoria or panic, it's often time to bet against the prevailing story. Let me give you a simple, actionable framework. Identify the dominant narrative. What is the one story everyone is talking about in your asset? Is it inflation is sticky, the Fed will cut, this is a crypto supercycle? Name it. Gauge its maturity. Is this story new and controversial, Act 1/2, or is it the only thing people talk about, Act 3? Be brutally honest. Check the mirror, the chart. This is your reality check. What is the price action doing? Does it reflect calm, steady conviction, healthy trend? Or does it reflect emotional extremity, climactic volume, wicks, parabolic moves? The mirror tells the truth. Position for the pendulum swing. The market is a pendulum. It swings on stories, but it reverses on emotional extremes. Your highest probability trades often involve fading the extreme emotion reflected in the mirror. When the mirror shows panic in a long-term uptrend, a healthy story, that's a potential buy. When it shows euphoria, that's a potential sell. This changes your entire mindset. You stop asking, what should the market do based on my analysis? You start asking, what is the market feeling right now, and what story is it telling itself? You move from being a technician to being a market psychologist. Now, here's where we synthesize it. This is your edge. Your edge lives in the tension, the gap, between the storyteller and the mirror. The storyteller is screaming, AI will change everything. Buy this stock. The narrative is powerful, intoxicating. But the mirror is showing you a weekly chart that has gone parabolic. It's showing you a volume spike that screams exhaustion. It's showing you a price pattern that is utterly detached from any reasonable moving average. The story says one thing. The mirror shows you the emotional consequence of that story. And when the emotion in the mirror reaches an extreme, euphoria or panic, it's often time to bet against the prevailing story. Let me give you a simple, actionable framework. 1. Identify the dominant narrative. What is the one story everyone is talking about in your asset? Is it inflation is sticky, the Fed will cut, this is a crypto supercycle? Name it. 2. Gauge its maturity. Is this story new and controversial, Act 1/2, or is it the only thing people talk about, Act 3? Be brutally honest. 3. Check the mirror. The chart. This is your reality check. What is the price action doing? Does it reflect calm, steady conviction, healthy trend? Or does it reflect emotional extremity, climactic volume, wicks, parabolic moves? The mirror tells the truth. 4. Position for the pendulum swing. The market is a pendulum. It swings on stories, but it reverses on emotional extremes. Your highest probability trades often involve fading the extreme emotion reflected in the mirror. When the mirror shows panic in a long-term uptrend, a healthy story, that's a potential buy. When it shows euphoria, that's a potential sell. This changes your entire mindset. You stop asking, what should the market do based on my analysis? You start asking, what is the market feeling right now, and what story is it telling itself? You move from being a technician to being a market psychologist. So let's wrap this up. The market doesn't test your analysis. It tests your self-awareness. Every time you look at a chart, you are not just looking at price. You are staring into a mirror held up to human nature. You are listening to an ancient storyteller weaving tales of fear and greed. When you internalize this, you stop fighting the market. You stop feeling like it's out to get you. You realize you've been fighting a reflection of yourself, of all of us. You start to understand it. You can listen to the storyteller to understand the direction and watch the mirror to know when the story is about to end. This is the foundation. This is how you move from being a passive character in the market story to being the author of your own trading journey. Now, I want to hear from you. This is a conversation. In the comments, I want you to do this. Tell me, what's the one dominant story in the market you're watching right now? And when you look at the mirror, the actual chart, what do you think it's really saying about that story? Let's get a discussion going. If this clicked for you, if you're tired of fighting ghosts and want to learn the language of the mirror and the storyteller, then subscribe and hit that bell. We are going so much deeper on this channel. Every week, we break down these psychological patterns to build unshakable discipline. And next week, I'm going to give you something incredibly practical. You won't want to miss it. Until then, look at the charts differently. Listen, reflect. Thanks for your time.